Welcome to Business Digest. Today we delve into the topic that is in everyone's minds, the state of our economy and what it means for our future. Joining us in studio is First National Bank Botswana economist, Mr. Gomolemo Basele. Welcome to the studio, Mr. Gomolemo.
Thanks for having me.
Okay. Briefly introduce yourself to our guest and provide your background information.
Okay, thank you. So as you already said, my name is Gomolemo Basele. I'm employed at First National Bank as an economist. I've been in the role now for just over 2.5 years, and I've been with the bank for just over 6 years. I started off as a quantitative analyst within the research and economists team. So essentially, I help out with the macroeconomic forecasting for the bank and our clients as well.
Okay, so the economy is fast becoming the topic of the year, particularly the budget. What are you seeing in terms of the budget keeping the focus made in February budget speech?
Thank you. So I think in terms of the budget speech that was presented in February, as you've said, the economy is on the tip of everybody's tongue right now. So I think a lot has changed since the budget was delivered in February. We've seen our economy slowing down quite substantially with the first quarter GDP figures. And you know, it's also pointed to a slowdown generally within the diamond market, as well as challenges that natural diamonds have in the form of synthetic stones and the market share that they command. So what that points to is possibly a less stronger fiscus than we had expected at the start of the year, which could possibly lead to delays in some of the key delivery items that were also highlighted in February.
Okay, from what you've seen and what you know, what has really changed in this focus?
So, well, the Ministry of Finance hasn't shared any revised forecast yet.
Okay.
But I would expect that the mineral revenue line that they previously shared would have significantly dropped due to the slowdown in sales that we've seen. So we've seen De Beers also release their figures in terms of sales and what they've been able to achieve. And what you see is that sales still remain quite depressed compared to initial expectations of a recovery within the diamond market. And you know, that obviously then speaks to the mineral revenues in terms of royalties and taxes that the government is also able to receive from their partnership with De Beers. So essentially, that's what I would expect, a slowdown in mineral revenues and also the impact that it's likely to have in terms of key expenditure lines. So the first one, which we've heard the minister also basically allude to, is the development budget, where we expect some projects to be actually held off until the situation improves. But it also speaks to the operational side and how also government is able to support other areas such as state-owned enterprises, the subventions that they extend to those institutions, as well as the size of the wage bill and what they're able to offer government workers as well.
Okay, so what do these changes mean in terms of structural changes to the economy?
So I think in terms of structural changes and what's yet to be fully determined is the impact that synthetics are having on the diamond market. Mm-hmm. So the diamond market has been depressed, but that's also affected synthetic diamonds. So synthetic diamond prices have also come down. Now, generally, on a cyclical basis, we expect the market to recover. So that follows a recovery in global economic activity, which is expected to improve next year and support demand for luxury items such as diamonds. But as that happens, it's still a bit difficult to tell where consumer preference will lie in terms of synthetics, which have very little impact on the environment, or natural stones, which despite having a much more negative impact in terms of the actual activity, have a positive impact in terms of sustainability in the areas where these stones are mined.
Okay. Many people have panicked about the fiscal numbers that you've shared. Would you say these fears are justified?
So I think panic is maybe not the right way to coin it. I think concerned would be better. So obviously when there's an economic downturn, as we're starting to see in terms of GDP figures, which impacts the fiscus, it's definitely concerning in terms of what the country is actually able to achieve over the course of the year. But that being said, there's still avenues the government can explore to try and basically fill the funding gap that's now being produced by lower mineral revenues. Obviously, the short-term outlook is negative, but we still have the opportunity to also borrow externally from development funding institutions just to take advantage of that very strong rating actually within the region. And our debt to GDP figures still remain low. I think the one key area maybe where government might be hard pressed is actually tapping into the government investment account. So that's been severely worn down. But like I say, there are still other avenues that they can also explore to meet their funding needs.
So how severe is the continuing dependence on diamonds?
So I'd say it's quite severe. So Botswana's dependence on mining activity, especially diamonds, is something that has been highlighted as a concern by the likes of the IMF, World Bank, as well as also internally, it's been admitted even from a Ministry of Finance standpoint, the need to diversify and reduce our dependence on mining activity. And the reason for that is that it leaves Botswana open to external factors. So global demand goes down, our growth goes down with it. So we're not really cushioned from the volatility that we see happening externally. And until we see increased diversification, especially within sectors that are able to absorb quite a lot of employment or individuals that are unemployed, Botswana will continue to see these severe dips when global demand goes down. And in terms of the recovery, it becomes more and more uncertain the more popular lab-grown diamonds actually become. So I think previously it's always been a concern, but I think we're also to a certain degree saved by the fact that natural diamonds basically commanded the entire diamond market, which allowed Botswana to keep recovering and to try and implement some of its development agenda items. But going forward, I think what we're seeing now, especially since the pandemic essentially, is the severe need for Botswana to diversify.
Okay, thank you so much. We'll continue our conversation after the quick commercial break. We continue our conversation with Mr. Basele as she shares more insights about the economy. Mr. Basele, the Finance Minister, Peggy Serame, mentioned have taken measures to calm down fears about the budgets with statements in Parliament and State TV. In your opinion, are these efforts enough?
So yeah, as you mentioned, the Ministry of Finance has started to take measures in response to some of the challenges that the fiscus is obviously facing. In terms of what they've done so far, I think we've seen them basically halt certain allowances for travel to ensure that only the most essential travel is undertaken. We've seen that projects that haven't been awarded at tender stage are being held off at least until November. So there are definite measures to try and reduce some of the pressure on the fiscus. I think the measures are good, obviously, because it puts less pressure on government spending. But there are other areas where fiscal consolidation essentially can be carried out. So, but the problem with these is that changing some of the key spending areas might not be as direct as what we've already seen the minister basically announced. So I think the measures in the short term were very necessary, but over the longer term, I think there's greater need to try and reduce the pressure on government spending and ensure that the spending is directed towards more development and infrastructure projects, and basically trying to reduce the size of the operational expenditure essentially.
Trend analysis shows that the current budget difficulties are new, or the worst that the economy has faced. Why do you reckon there's more public commentary about the numbers now?
So I think just generally interest in terms of public finances has increased over the last couple of years since the pandemic. And that's because we've been faced with challenges within this period that we haven't seen before. And I think there's also been a lot of interest in terms of how the government also responds to some of these challenges. So you remember in times of COVID, we were faced with a budget deficit, but there was also a need to safeguard the economy, not only from a health standpoint, but to ensure that jobs were safeguarded as much as possible. Industries were also cushioned as much as possible from the disruption that we're seeing. And we saw special funds also being set up to try and support business activity. So I think the interest now is basically the market's expectation of the government actually sharing measures that they're looking to employ to not only cushion the economy from the disruption that it's obviously facing from reduced activity, but also to help us diversify faster, as well as deliver the required infrastructure that we still need to improve Botswana's operating environment.
Okay. Even in these difficult times, there are sectors which are doing, that continue to do well, especially the banking sector. What do you think is behind the resilience of these sectors?
So yeah, there are sectors that continue to do well. Another one, just apart from banking, is retail. So I think the sectors that remain necessities will, to some degree, be cushioned from the severe dips that we're seeing from the likes of mining, as well as support services in that regard. So what basically keeps them positive, I think, is the fact that we still need to use those services. They're essential in terms of basically day-to-day activities within the economy. But that being said, I think some of these sectors have also shown a slight slowdown, or some of the matrices that apply to some of these sectors are starting to show a slight decrease. Banking, for example, credit extension remains positive, but it's starting to slow down from what we saw at the beginning of the year, which also could highlight some of the pressure that the rest of the economy is facing.
Okay. Keeping on the banking sector, what major trends are you seeing there, and how do these reflect on the growing sophistication of the broader economy?
So I think some of the key trends, credit extension being one of them. I think from a household standpoint, we are seeing a slight slowdown in terms of credit extension, although it still remains positive, which is key to highlight. But I think the breakdown of that credit also speaks a lot to consumer behavior. So a lot of it is within the unsecured space. And then if you weigh that against the CPI basket, for example, and what basically, or the subgroups that make up the largest chunk of the CPI basket, you'll tend to see that from a CPI standpoint, it points to average households spending the bulk of their income on necessities. And then you see them borrowing quite heavily on the unsecured space, could point to the fact that households actually borrow to finance their consumption on a monthly or day-to-day basis. From a business standpoint, I think the areas where we're seeing credit extension actually growing are actually aligned to some of the key priorities that have been highlighted by government. So because we saw such a significant ramp up in terms of the development expenditure for this year, or what was actually announced in February, we've seen sectors that are aligned to developing that infrastructure also increase their credit. So the likes of construction, utilities, we're seeing a lot of solar power plants coming up. We're seeing the national grid being renewed, as well as the continued works around North-South Carrier, as well as other sanitation projects, drive some of the credit growth that we're seeing from a business standpoint, which are aligned to the sectors that were also highlighted for development this year.
Okay, there have been concerns raised about inadequate financial literacy within our society. What more can be done?
So in terms of what more can be done, I think, well, I hope that this is part of it. So I think continued conversations around what's happening, the impact of some of the key challenges that we face, the opportunities that also are available within our market, as well as the impact of taking certain types of credit instead of others, and the impact that will have in terms of your affordability and ability to pay back within short and medium and long term is something that can be continued to be done. From our standpoint as FNB, we try to continue engaging the market in terms of understanding not only our products, but just the impact of borrowing, saving, generally, and investments in terms of how it influences individual balance sheets. So we do this right across the board. We do it for various companies, always available from a staff standpoint to come and educate members of staff for different companies. But also we're trying to cascade this to lower levels. So even starting at a grassroots level across the country, talking to primary school students, high school students, for them to get a better understanding as they basically evolve in terms of how financial products can be used to their benefit.
Interesting. We're going for a quick commercial break. When you come back, we continue our conversation with Mr. Basele.
Hello?
Okay. We continue our conversation with Mr. Basele. Mr. Basele, how can the various players in the financial sector ensure that important players such as SMMEs understand the economic trajectory and budget movements?
Thanks. So I think the first way is obviously to engage your SMEs with the information that you have available and what its implications are. So from our side, we share quite a lot of research with a lot of our clients, which includes SMEs, highlighting essentially key data releases, as we've seen, their implications, as well as forecasts based on the data that's already come out. So I think that's a key way to try and engage your clients by sharing the information you have available and how it applies to their line of business through the broader economy as well as a sector view, just so that they prepare themselves for either challenges that are coming their way or opportunities that might avail themselves. All right. Another way is through mentorship. So depending on what these SMEs or what line of business these SMEs are involved in, the financial sector, banks such as ourselves, can help these companies grow in terms of bringing them into the procurement processes. So instead of looking externally, commercial banks can bring some of these SMEs in to supply them with some of their key items. So just like normal businesses, commercial banks also need toilet paper. So they're basic items that commercial banks need, which some of these SMEs can also help provide for them.
Okay. Why is it important that Botswana in general and businesses understand which direction the budget and the broader economy is heading?
So it's very important in the sense that the budget presents key opportunities that Botswana can take advantage of, as well as SMEs. In terms of the general trend of the economy, when you see some pressures building up, you can also prepare yourself in terms of, for example, as a company, how it's going to affect your cash flow cycle and what you do to try and limit that. So it's important in terms of not being caught off guard, not waking up one day and all of a sudden you don't have a market to sell your product. It's important to keep track of these things so that you're better able to plan and also ensure that your company stays in operation. So it's important to highlight opportunities as well as see the stresses and prepare for them.
Okay, so it's very crucial. That's what you say. So the banking sector frequently talks about the unbanked sections of the economy. What is the importance of getting more Botswana into mainstream banking activities?
So it's important for various reasons. The first is that the unbanked portion of the population is quite chunky, and you can get a reasonably good estimate just by looking at our entire population size, age groups, as well as the employed individuals, and get a sense of how many individuals are actually unbanked, but within the age group where they can actually access some of these products. So it's important in the sense that remaining unbanked, despite the fact that we're seeing various payment solutions being created for that portion of the population, it still leaves you closed out of certain critical services. So can't get a mortgage, for example. Getting credit is not as easy as if you were part of the mainstream banking system. And that has other implications as well. It becomes then harder to also transfer wealth. It affects your legacy essentially as an individual. So bringing them into the mainstream allows them to build wealth easier, as well as transfer it to their loved ones as well. And over and above this, it obviously has benefits from a fiscal standpoint. Having more individuals as part of the mainstream economy will also make it easier or rather could also improve tax revenues. So these individuals will then have a more formalized way of also basically accounting for their business activities. And it makes it easier for them to pay their dues in terms of taxes, further contributing to the development of the economy.
Any last thoughts about what can we expect in the economy for the rest of the year and beyond?
So yeah, in terms of Botswana's economic activity this year, I think what we've already seen come out of the figures is basically a less positive outlook for the year, obviously. So would expect definitely muted activity this year, given the challenges that we're seeing from a diamond standpoint. But over the course of next year, would expect some rebound. So that's been driven by a few factors. The fact that we expect global activity to improve towards the tail end of this year and heading into 2025, which should stoke up some demand for diamonds. And over and above that, the low base that's been created by the negative figures that we're seeing this year will lead to, basically that low base effect will lead to an almost exaggerated GDP figure next year. So activity next year is expected to improve. We expect that as that also happens, the fiscal should also get a chance to improve and allow government also to implement some of the projects that are being delayed by the challenges that we're seeing this year. So the outlook over the remainder of this year, over the fourth quarter and heading into 2025, should be more positive than what we've seen happening according to the data that's already come out. In terms of other factors, I think the fact that our policy rates, so our interest rates, are quite low is supportive of growth from an activity standpoint. So debt service obligations from a household standpoint are low, as well as from a business standpoint. So there's pressure that's also being released from businesses as well as consumers, well, the hope is that they should take up more credit and stoke up some activity. I think the fact that inflation has also come down quite substantially is further adding to that. So we'd expect households as well as businesses to take advantage of that, which should contribute to a better growth profile over the next year.
Okay. Thank you so much, Gomolemo. Okay. Catch the next episode of Business Digest next week as we unpack more economic issues that matter to you. I'm Pauline Dikuelo from me and my team. Until next time.